In today's episode, we are going to talk about how to buy a home with 100% financing. Yes, you heard it correctly, 0% down out of pocket. It also comes along with a $15,000 grant for closing costs. We're going to talk about who qualifies, meaning what are the requirements. We're going to talk about like the loan terms, meaning is it like a 30-year fix? Is there mortgage insurance? What do the interest rates look like? We're going to talk about like if the property has to be eligible, and then we'll talk about the process, how the process works, meaning like is it more complicated than a regular loan or less complicated? To help us with that, we got Mike Yates with My Home Lending, Senior Vice President. Welcome to the podcast.
Hey, Jose. Thanks for having me.
Great. So let's jump right into the program.
Okay.
What can you tell us about the program?
Yeah, the program is extremely unique, and we call it our Home Opportunity Loan. So what it is, it's a program that will allow up to 100% financing of the purchase price up to loan amounts of of 806,500. If the loan amount is above 806,500, they can still use the program. They just need to either put down 5% or get the loan balance down to 806,500.
Got it. So basically, you can go 100% as long as the loan balance is below 806, or you can go higher with a little bit of a down. So let me ask you this. What's the catch?
The catch is, if there is one, it needs to be in a low or moderate income neighborhood. Some of these big banks that we work with, they have CRA money, Community Reinvestment Act money, to help out with these low and moderate neighborhoods. And so they'll provide special financing to help kind of improve the neighborhood, get first-time home buyers out there that wouldn't normally buy. And you don't have to be a first-time home buyer for this. You just can't own another property at the time of closing. So if you have something right now and you're gonna sell your property and close concurrently, you can definitely take advantage of this program.
I love it. Now, how does it work? Is it two different programs, meaning like the 100% financing is one program and the 15K grant is a different program? Are they the same thing? And how do they work together?
They're pretty much one and the same. So the program comes with a $15,000 forgivable grant. So you can qualify for the 100% financing, and the program comes with the grant of the $15,000 that can go towards the closing cost. So in most cases, it can cover pretty much all the closing costs. Only thing required for the buyer, they have to put a minimum of at least $500 down in the process, or towards the closing cost. So they can actually, in most cases, pay for the appraisal with their debit card, which comes out of their checking or savings account, and that would qualify for the required money out of pocket for them in most cases.
Amazing. It's interesting because $500 is less than what somebody would have to put down for a rent deposit, basically.
Totally. Amazing. Yeah. And what's also great about the program is you don't have to do 100% financing. If you want to put down 5% or 10%, get your payment a little bit lower, no problem. You can definitely do that. And it actually helps out with your interest rate a little bit.
Got it. Now, let me ask you this. Like one of the things that I believe you said off camera was no mortgage insurance. What is mortgage insurance and why is that a big plus?
Yeah, so mortgage insurance is actually insurance for the bank. In the bank's eyes, when you're putting down less than 20%, it's a little risky in their eyes. So what they do is, in most cases with the PMI, they'll put an insurance policy on the loan in case of foreclosure. So say they have to foreclose on the property, and they actually end up selling the house for less than what is owed, and they take a loss on the house. They would go to the insurance company and say, "Hey, look, we just lost $25,000 on this loan. We need to be reimbursed." So PMI is just protecting the bank because there's less than 20% down into the deal.
I love it. Now, let's talk about like the property qualifications, like meaning what type of properties qualify, and then also like income limits as well too, meaning like as an individual, if I make $1 million a year, would I qualify for this loan as well too?
Unfortunately, you wouldn't. So as far as the income caps go, it will range based on your county. So this is not available in every county. As far as California here, let me tell you what we have here. So you can do this in Riverside County, San Diego County, Orange County, Ventura County, which we're based out of. So I focus a lot on Ventura County, LA County, Contra Costa, Napa, Placer, San Francisco, San Mateo, and Santa Clara. So quite a few counties that you can actually use this program. And what we do is we go to a website and we just punch in the address. The website is geomap, GEOMAP dot FFIEC.gov. Anyone can go there and you punch in the address, make sure the year is clicked to 2024, and the address will show whether it's in a low or moderate income neighborhood. If it shows up as low or moderate, it qualifies for this program. So income limits will vary based on the county as well, and it's pretty generous, compared to most programs that I've seen out there for the income cap. So, for example, in Ventura County, the income cap is usually in most cases 196,950, which is pretty generous. If the buyer is actually a first generation home buyer, which means they have never owned a home in the last 3 years, and if their parent has never owned a home, they can actually go higher. Actually, it would be 262,500 for the income cap on that. If it's a married couple, they just need one of the spouses to have parents that have never owned a home. So you can actually go quite a bit higher if they are a first generation home buyer.
Yeah, it's interesting because a lot of the programs that are like this, the income limit's so low that based on the prices, you won't be able to qualify. So it's almost like this little small window
Exactly.
of buyers, which in this one for 200K, you'll be able to qualify, or 196, 950, you'll be able to qualify for a
Yes.
decent amount and be able to actually take advantage of the program.
Yeah.
Not only that, but if you haven't owned a home in 3 years and your parents don't own a home, right? Or
Correct.
haven't owned a home, then you can go higher. Now, let me ask you this, like what areas in Ventura County typically qualify for this program?
Yeah,
Meaning
there's
like,
quite a few. I actually sent an email out about 2 weeks ago to a bunch of realtors. About 200 homes in the county that I pulled up qualified. So most of Port Hueneme is going to qualify for this. I would say most of Santa Paula, most of Fillmore, a lot of Oxnard is going to qualify for it. A lot of Ventura qualifies for it. Almost everything that is off the avenue is going to qualify for this. And then certain other pockets in Ventura. There's a few areas in Camarillo that actually work as well. So people will be surprised how many properties actually qualify for this program. And one thing we didn't really speak about was the interest rate on this. So a lot of times on these programs, the interest rates will be a little higher than the market on this. So with this one today, at 100% financing with, say, a 760 FICO score, looking at a rate of 6.655% with no points, no PMI, and that comes with the $15,000 towards closing cost.
that's amazing. So instead of having to ask the seller for closing costs, basically it comes with 15K already included. Now, let me ask you this. What's the minimum FICO score? Is 760 the minimum FICO score for the program, or
No,
is
that's your top tier for the pricing. We can actually go down to 640 with some, different restrictions. So generally down to 680 without any kind of limitations. If you're below 680 and if you're between 660 and 680, they normally want to see that you have been paying rent to a landlord or to a private party for the last 12 months. Just kind of show you can pay that, you have history of making the rent payment. We can go down to 640, but at 640, you have to put down 3%.
Got it. Okay, which is still good though. Like even like FHA for some lenders is like minimum 680,
Right. No,
in some cases with some
extremely generous and flexible.
Got it. Okay. Now, let me ask you this. What about like the process to close on the loan? Like there's another program where it's the Cal HFA or something, and the process takes a little bit longer to be able to qualify. What does the loan process look like for this loan?
With this one, we recommend about 35-day escrow. With some banks, we can kind of pull some strings and say, hey, look, I need a rush review on this and that. This bank we work with on this is pretty much kind of a machine. They don't really work too much faster for anybody else. So we normally recommend 35 days, and if we can close faster, then we definitely will.
Got it. What about for some loans? There's like a double appraisal on the property, one for Cal HFA or one for the FHA. Is that similar? Does that
Now,
are there
this
any extra items meaning that would be out of
this
the
program is
ordinary?
very straightforward. There's really not much difference with this program than any other program. The home buyer will need to take a home education course once they're approved for the loan between in the escrow process. And that's really just kind of a simple 1 hour course they'll take online. And once they're done, they get a certificate, and that takes care of that. But for the most part, if you're a simple W-2 employee, we just need your W-2s for last 2 years, last two paycheck stubs, and then last 2 months bank statements. There is a requirement of having 2 months reserves. So reserves are extra payments in the bank. So say, for example, your mortgage payment was $5,000, including your mortgage, taxes, and insurance. They're going to see that you have at least $10,000 in some shape or form, whether it's your checking or savings. We can use retirement accounts for that, and we can also, if the buyer's strapped for cash, and they don't have that, they can actually get a gift for the reserves as well.
Got it. Are there limited funds for this program, like for the 15K grant, and then, or even for the 100% financing? And then how does the grant work? Like, meaning it's a grant, what point is it forgiven?
Correct. Yeah. So as far as we're aware of, there's no time restrictions on this. There's not a allotment of funds that's going to run out. So it's ongoing as far as we know. As far as the grant, $15,000 forgivable grant, so it's given to you at closing to cover the closing cost, and it is forgiven. 20% of it is forgiven each year over a 5-year period. So at the end of the year, the mortgage company is going to send you something to put on your taxes, reducing I believe $3,000 a year of that grant. Is at 0%. So say, for example, you had the loan for 2 years, there's still $9,000 on there. You would just owe $9,000 paying that off. There's no interest on that as well.
I love it. What about co-signers on the loan?
So it's a little restrictive on that. It needs to be owner occupied, occupants only on the loan on this. We can't have non-occupying co-borrowers or mom and dad helping out on the side. So parents can help out with the gift funds for any kind of down payment. So if parents want to help out with a gift to get for 5% down or 10% down to get a lower interest rate or help out with the payment, that's totally fine, but they cannot be on the loan with them.
Yeah. It's really interesting, even for listing agents, people that carry lots of listings in Oxnard, Santa Paula, it's great to put it on the MLS, like 100% financing available on this property, because it'll make buyer's agents aware of it as well too. Let me ask you this. What about types of properties? Like, so for example, like, is it restrictive of condos, townhouses, single family residences?
We can do single families. We can do condos, townhomes. They will not do new construction condos. They don't want to deal with the pre-sale requirements and all the different stuff behind the scenes on that. But we can do existing condo projects, no problem. Single families are fine. They don't want 2 units. ADU is fine, but single family, 1 unit, condo, single family. They can do. It's available in other states, and they can do manufactured homes in other states, but they're not allowed in California.
Got it. Okay. What about fixers or certain conditions for the property? I know, like FHA, the property, no peeling paint, no broken windows, flooring has to be indecent. Are there any restrictions there?
It pretty much follows Fannie Mae guidelines on this. So, as far as the appraiser, they're not out there looking for anything. Just like on a conventional loan, if there's any kind of safety or health issue, that will get called out. But they're not looking for like the chip paint, like an FHA appraiser is looking for, or other items like that. So it's pretty straightforward, like a conventional loan.
What about if I wanted to buy down the rate? Is that something that I could still do?
The most that we can do based on our ratio here is a 1-point buy down, and that will normally get the interest rate down about 0.25%. So just like I told you, in the 100% financing, it was 6.655 for the 100% financing. With 5% down, it'd be 6.357%, no points, no PMI, and comes with 15K. So the rate's pretty aggressive as it is, but if they want it, if there's extra money from the seller or something like that, they can apply that extra point towards it.
Got it. Okay. And then basically, if I ever want to refinance out, like if rates drop, the only thing is if I refinance before the 5 years, I got to pay a portion of the grant, basically, that was
Correct.
given.
Yeah, that'll be kind of a silent second hanging back there.
Who's the ideal buyer for this program, or who are you seeing mostly taking advantage of the program?
A lot of it's first time home buyers who are out there looking and they're kind of getting in with their FHA loan or 5% down. And when they come across this, they're really shocked and they almost think it's too good to be true, but it's actually very legit. So, people should really take a look at this program and try to get pre-approved with this. If they don't qualify for the program, if they don't fit the box, I'm a mortgage broker with access to 50 other banks, and I can do an FHA loan for you, conventional VA. We can flip you over to something more traditional if you don't fit this box.
I love it. Great. Now, let me ask you this. Somebody wanted to get in touch with you, or somebody liked this program and wanted more information. What's the best way for them to do that?
The best way is just give me a call or text me. Phone number is 805-407-5777. Text or email. I work weekends just like most realtors. So if you're out looking at an open house and you have to get pre-approved within an hour, I'm used to it. It's just part of the business.
Amazing. Great. So I want to say thank you, Mike, for taking the time to come on the show. For our viewers, we had Mike Yates, My Home Lending Senior Vice President. We talked about 100% financing and a 15K grant to be able to purchase a home. We went over the requirements, who qualifies, etc. Thank you so much for being on the show. To
Thank
our
you, Jose.
viewers, until next time.